Hello, everyone. Insurance is one of the oldest financial services that plays a vital role in helping people cope with risks. Yet, despite insurance's significant role in building resilience against economic shocks, insurance uptake and usage remain low in many emerging markets, particularly for low-income households and small-scale entrepreneurs. Research from LSE shows that in Asia and Africa, only 3.5% of households are covered by health insurance. This problem is further compounded by the limited data available about the barriers to access and usage of insurance products. At the same time, at Acción, we have seen a new wave of insurance products that we believe can play a powerful role in advancing financial inclusion. Addressing risks in innovative ways is complex and requires ecosystem level support from various stakeholders, which is why today we are fortunate to be discussing this new wave of inclusive insurance models with stakeholders across the industry's value chain. Today, we have the opportunity to discuss these new insurance models through the perspectives of four stakeholders in the industry: an entrepreneur, an insurer, a reinsurer, and myself, an investor. Today, I'm excited to welcome these fantastic panelists. First, we have Felipe Cunha, the CEO and founder of To Garantido, an award-winning social impact insurtech. Felipe has dedicated his career to transforming the insurance landscape of Brazil's low and middle-income gig workers, leveraging over a decade of experience in international finance, venture capital, and infrastructure development. Felipe has successfully led To Garantido to become a leading provider of embedded insurance solutions in Brazil. We also have Quentin Gisero, Head of Partnerships and Innovation at AXA Essential, a business which drives access to inclusive insurance for 14 million low-income to mass market customers across 12 emerging markets. Quentin also steers the development of inclusive insurance solutions for vulnerable segments in Europe with a particular focus on micro-entrepreneurs. And joining us shortly, we'll have Shelley Habecker, VP of Life and Health Sustainability Lead at Swiss Re. She currently focuses on helping Swiss Re reinsurance partners grow sales with social impact by making life and health insurance more inclusive for underserved communities. Shelley joined Swiss Re in 2016 and has worked in several innovation roles, using her background as an anthropologist to conduct market research to better understand customer needs for business case development. Today, I'll be moderating this discussion to explore what is working at the frontiers of inclusive insurance, what isn't, and how we can work together to increase insurance adoption rates. Today, the first model we want to discuss is the rise of embedded insurance. In this model, insurance services are integrated within digital platforms that are already being used by clients. This makes it easier for products to be distributed, as clients can easily access them as part of their day-to-day operations. In addition, insurance providers can leverage unique data obtained from these digital platforms to improve underwriting. We have seen this model gain traction globally and attract significant investment across multiple markets. Felipe, Quentin, super excited to chat today about this model. And maybe, Felipe, we can start with you. As an entrepreneur, you work in this space. Can you please share more on your business model and why you chose to create an embedded insurance startup?
Excellent. Thank you very much for the introduction, Sebastian. It's a pleasure to be here. My name is Felipe Cunha. I'm CEO and founder of To Garantido. To Garantido is a social impact insurtech focused on delivering insurance solutions for the low and middle income population of Brazil. You have been mostly focused on the gig workers, mostly delivery drivers that work with Brazil major digital platforms, food delivery platforms. First, we didn't start as an embedded insurance model. We started as a marketplace to offer insurance solutions for the low and middle income population of Brazil, since Brazil is one of the largest digital engaged countries of the world. When we saw all the large platforms, Brazil, especially in the low and middle income segments, they have a very high engagement in the digital media, such as YouTube, Google, and WhatsApp, and so on. So we decided to create this marketplace for insurance products for low and middle income. But then in 2021, we won a bid for iFood, which is one of the largest food delivery platforms of Latin America and one of the largest globally as well, to be the Insurtech chosen to distribute digitally insurance products to the gig workers that are part of iFood ecosystem. And when we pivot this model to embedded insurance, we saw really soon how we could, from a traditional marketplace to embedded insurance model, have a much more a significant conversion rate and engagement and increase insurance selling into this platform. Because we saw, like, just when we choose, we transferred to the embedded insurance model, at the first time or at the first moment, we already doubled the conversion rate, because we saw when we could offer the right insurance offer at the right price, and especially with the right acceptance rates, which is one of the biggest problems iFood had, we can truly change the game for digital insurance purchases. And it's
Awesome.
been a historic success since then, achieving very high conversion rates and protecting hundreds of thousands of gig workers in Brazil.
Awesome. No, thank you for sharing that, Felipe, and excited to dig more into this model, especially with someone on the front lines. Quentin, I'd love to maybe ask your perspective as an insurer. Does AXA currently provide solutions in the embedded finance space? And if so, what excites you about this business model?
Well, thanks, Sebastian, for the invitation, and Felipe also for what you said. I couldn't agree more. And interesting enough, what Felipe doesn't say is that he's taking, his success in Brazil and he's taking it to France. I found that super interesting and exciting. And there's many gig workers here as well, and social protection challenges, and embedded insurance opportunities make a lot of sense here. To be honest, my answer to your question, Sebastian, on embedded insurance, I think if you're trying to look at the inclusive insurance side of things, trying to bring, social protection and insurance to underserved populations and people who don't have a huge experience with insurance, it's a must-have. And it's probably where the industry was born. So I don't know if it was called embedded insurance, maybe it was called credit-linked insurance. Maybe it was, working with microfinance institutions, which was where a lot of microinsurance was born. And I know that Shirley has extensive experience in that, so I'll let her maybe speak about it. But it's always been there because, people don't wake up in the morning and, they say, hey, I'm going to buy an insurance policy today if they've never been insured. They won't come on your website, right? And most of these customers in emerging markets, they're in the informal sector, they're their own employer, so they don't get insurance through their work contract, right? Because there's no formal work contract. So the distribution, getting insurance to the last mile, you have to bring it into customers' kinds of lives, and you have to combine it with services and goods and brands that they use and trust. And I think that's where, embedded insurance makes the most sense. Digital has definitely taken it to the next level, and I think that's your point, Sebastian, right? So, but there have been maybe several waves. Even today, I just before this panel, I was on the phone with a telecom operator who also runs a payment institution in Africa. And we were having exactly this conversation, how can we embed insurance, both, within their telecoms business and their mobile payments business to solve their key challenges. So my answer would be, it's essential. It's probably always been there, but also it's not that easy, right? And sometimes we think, okay, well, we're going to bundle things. It's going to be great. We tried several partnerships with money transfer companies. We were thinking, okay, well, they send money back home. Why can't they also send, a bit of insurance back home, from France to Africa or from the US to Mexico? But actually, sometimes it's quite difficult. Not all these organizations have, the the sense that, insurance should be part of their business model, and not, you need to find the right moment of life for the customer for it to work.
Totally. No, thank you for sharing that. And I think actually I love the points you're talking about, right? There's tons of potential, but there are challenges. It's not as a no-brainer as it might seem at first glance. Shelly, I'm super curious. As a reinsurer, can you share your perspective on the potential you see in embedded finance, and share a little bit more about how Swiss Re, how you're operating in this space?
Yeah, sure. Maybe first, let me check. Can everyone hear me all right?
We can.
Excellent. I had some issues with firewalls making it difficult for me to dial in, so I'm on my phone. But yes, very happy to be here. And maybe just to start off, I think for those of you who maybe aren't as familiar with what reinsurance is, maybe let me start there. That reinsurance is really, put very simply, a way to manage and share risk across insurance companies and public sector government institutions. That way, if there's a pandemic or a natural catastrophe, no one entity is holding all of that risk. So I guess the question is, why would a reinsurance company be interested in embedded insurance and inclusive finance? And of course, we have a financial interest in expanding insurability, but at the same time, we also recognize that there are a lot of people who do not have the risk protection needs, that they're unable to manage their risk adequately, and they don't have sufficient risk protection. So we call that a protection gap. And I think in a financial inclusion conversation, it's the financially included who have lots of opportunity to access insurance. Most of traditional insurance is sold through agents who get commissions, so they're incentivized to sell big policies to wealthier customers. And I think the really exciting thing about embedded insurance is it opens up a whole new way to access customers, because you're not working through an agent channel. Instead, you're working through institutions that are already transacting with lower income customers. They already have the trust of those customers, and you can put the insurance into those transactions in a seamless sort of way so that it doesn't hurt so much when you pay the premium. It's sort of part of another financial transaction that you're making. And maybe just to give a very concrete example, Swiss Re reinsures many embedded insurance products globally. But the one that I really enjoyed learning and visiting was earlier this year. I had the opportunity to go to Nigeria. And in this particular case, we're partnering with a bank and an insurance company and Women's World Banking, which is a financial inclusion nonprofit that specializes in microinsurance. And the product is made available to women who are entrepreneurs. And this opportunity allows them to have some sort of income replacement. So imagine you are working in a marketplace, you're selling your wares, and you are hospitalized, or you have a child or a spouse who's hospitalized. That takes you away from your work for a certain number of days. And this insurance product pays out when you stay in a hospital overnight, and covers even if you're there for maternity benefits. So these women are accessing this product in the context of their loans through the bank. It's embedded in that loan, so they're paying back the loan, and they're also paying a little bit of premium, and they receive this benefit. And this is a product that we've worked on with AXA in Egypt. It's been quite successful for reaching women. And I do just want to highlight, if I can quickly, 4 things that I think are super important and required to make these kinds of embedded insurance opportunities successful. And this is something that we described in more detail in a Swiss Re report called the Life and Health inclusion radar if those on the line would like to check it out. But I think the very first thing I would say is it's super important to start with research to understand the needs of your target customer. Insurance companies have not historically transacted with lower income populations and some of these communities. So we don't have data. We don't know who these people are. And we can be making lots of false assumptions about what they need. And so it's super important to start by listening and understanding what these customers value. And many times they have their own traditional ways of managing risk. So there's ways you can come alongside and augment or support that. The second thing that's absolutely required are strategic partnerships. And I love the constellation of voices on this call because these are the partnerships that we work with all the time. We have entrepreneurs who are providing sort of the digital pathway to access customers. We need the distribution partners, the telecom companies, the banks. They have the customer. And then we need the carriers, like Quentin is representing AXA. And then sitting behind that is the Swiss Re's of the world that are helping to share the risk and can provide underwriting and pricing support. So that's the strategic partnership piece. The third thing is simple products. The products have to be simple. They can't be complicated or else it just doesn't work. And so there's a lot of innovation that needs to take place there. And then finally, I would say regulatory dialogue is really important. That's maybe the other party that should be represented on this call, but regulators have a mandate to protect consumers. And that's really important, but there's always a balance, right, in trying out new and innovative things. And it's important to be talking to your regulators to make sure that these models can be successful.
And Sebastian, if you allow me in
totally,
30 seconds,
please.
You know, I think illustrating, Shelley, your point on simplicity. You know, you mentioned the product in Egypt. I think, you know, this product in Egypt, it's a bit similar to the one in Nigeria. It's with a microfinance institution called the Lead Foundation, serving, you know, women entrepreneurs. And the difference that this product had was it was covering the risk of hospitalization, you know, for women borrowers. And it's probably the only insurance product in Egypt, and maybe even, you know, more broadly, where there is no exclusion whatsoever on the product, right? So we're not asking you, you know, did you go to the hospital because you had an accident, because you were sick, because of pregnancy-related questions. We're covering everything. And we're covering every hospital. And you know, it's a no questions asked product, right? And this is how you build the trust on the customer side. But it's also, you know, the way you ensure that the business model can work, right? Because if you're operating a $1 a month kind of policy, you don't want to have a very lengthy, you know, amount of work to do to pay a claim. You need to pay it very quickly. So it's really the simplicity which I would agree on with you.
I love this. Thank you so much for sharing these perspectives. And it's really exciting to hear how these models have been successful in different ways in Brazil, in Egypt, in Nigeria. Maybe as a follow-up here, I think one of the things that has come up in these points you're all making is around, you know, how embedded insurance is unique in the way that it's being distributed, right? You're working with different partners, you're working, you know, you're bundling it as part of a different set of goods. Can you maybe explain a little bit more on what is so exciting about distributing through these types of partners that maybe addresses some of the distribution challenges in direct insurance, and just some of the lessons learned on what kind of partnerships to look for, what has worked, what hasn't? Anyone that wants to speak on this?
Well, I can have a go if you want, Sebastian. I think what you're, I mean, it's the barriers, the challenges are that, you know, there's challenges of, you know, physical access to, you know, agents and brokers, which I think you mentioned, Shelley. There's questions of understanding and trust, which you mentioned, Felipe, right? So you need to find channels which combine, you know, a sufficiently large enough access to a customer base to kind of neutralize the risk and get economies of scale, So it sounds simple, but it's not that simple. You need channels which are trusted. When you top up your phone, it works. When you send a money transfer, the money arrives on the other side, right? So the promise is fulfilled. So you're building on this trust that these brands have, because I don't think there would be many people, among our customer base in Egypt with this microfinance institution who knew AXA before the product, right? But they knew the microfinance institution. So there's the trust aspect, and maybe one that we underestimate a little bit, but I think is essential, is you need that this channel enables you to transact financially. Because, collecting premiums and paying claims, it has to be quick, it has to be seamless, and it has to be cheap. And there's no business model if you're operating a 50 cents or a $1 policy in cash and you have to pay to collect that cash, or if you're sending a check on the other side of the country, right? So it's maybe these three things I would focus on.
Yeah. I would add to Quentin, it is very important on an embedded insurance model, especially when you are dealing with more complex products, to have a digital underwriting process. One of the things we did at iFood, basically, we massified the distribution of motorcycle insurance to gig workers within the platform. Usually, what the iFood did, they created inside the benefits club for the gig worker the possibility to access to insurance product to their motorcycle, and to through an automated chatbot solution, providing the whole digital underwriting and also digital inspections and so on, to give the possibility to the gig worker buy an insurance product that usually depended on a more complex underwriting in only 4 minutes. And with all the product explanation, the coverages explanations, explained to them online and digitally. And it is really important to have a lot of technology embedded on this. And there's also an integration challenge, how to integrate the platform that is performing the insurance purchase and the digital underwrite within the digital platforms that are the distribution partners. So it's when you can combine both strategies, when you have a partner that is gives their audience, their ecosystem, the awareness, and that they have this product available for a special price or a very accessible price to their client base or to the ecosystem partners. And also you can provide a very seamless integration and also policy purchase inside their app. It's a really, really powerful tool to give access to insurance. For example, most of our clients at Garantido and iFood and Rappi and Xperia and all the platforms we work with here in Latin America, we can offer them all the underwriting process digitally. And for most of them, it's the first time they are buying insurance in their lives. So first, the good thing is that they trust the platform, the channel that they are acquiring insurance. They always say, oh, there's the insurance from iFood, or they don't even know the insurance company who's behind it, but they say, oh, it's a good insurance, it's iFood provided. And also have a process that is very seamless and streamlined. And when they need to access the insurance to receive their claims, the processes has to be very fast, because especially those ecosystems, they communicate with each other very actively. So if someone doesn't receive a claim very fast and for a reason not very well explained, probably they will go through into their groups of WhatsApp and so on to say, oh, this insurance company, the product doesn't work. This insurance company, they don't give us the protection they said they would give us to us. So it's very active, and you have to have a very, I would say, very digital way to provide this insurance products. and respond to the needs of this underserved clients very quickly as well, in order to give the insurance products the proper awareness and also acceptance to the users, and really deliver a social impact.
I love the details of Felipe's case, because it kind of brings to life how all of this works together. But I think when you're trying to start something up, it's really critical to find the right partners who have aligned interest. I think one of the challenges that I've seen is that for you might identify a distribution partner that would be perfect to help you access millions of customers. But then the question is, why do they need insurance? What's in it for them? And is this going to be a long-term strategy for them to add value to their transactions by bringing the insurance in? Or is this just a short-term sort of marketing campaign? If it's a short-term marketing campaign, it's not likely that the whole thing is going to work, because you have different interests. So I think maybe the last thing to say is the importance of profitability, because very often it's 3-4 companies all coming together, and the business case has to work for all of them in order for it to be sustainable. And we're talking about small policies, so scale is critical in order for these embedded insurance models to be successful.
100%. No, thank you all for sharing this, and I agree. It's exciting to hear, how these things are working at the front lines, and also I cannot echo more what you're saying, Shelly. We've seen this as investors time and time again. The difference maker for a lot of these companies that make it and scale, and those that get stuck, is just the quality of those partnerships and finding the right product channel fit. So I'll switch gears a little bit now. We've been having this great discussion on embedded insurance, and we've actually been receiving a lot of questions on the Q&A section, which we'll answer towards the end of the panel. So listeners, please do put your questions in the chat. But now I'd like to draw attention to the second model that we've also identified as interesting. In one of the models, in this model that we're tracking, is parametric insurance solutions. In this model, payouts are tied to predetermined triggers, such as rain levels, which allows for automated claims resolution. For us, this is extremely interesting, as extreme heat, floods, and droughts become major global concerns. Parametric insurance models have emerged as a novel solution to protect against climate risks. And in fact, the first ever payout for a parametric heat insurance policy occurred in 2024, marking a pivotal moment for this innovation. So as we switch gears and talk about this other model, Shelly, I'd love to get your thoughts. What are the main advantages of parametric insurance models, particularly around managing climate risks, when we compare it to traditional insurance, and how do they enhance resilience against events like the ones we mentioned, such as floods and droughts?
Yeah, so parametric insurance is super, super interesting, I think. The key difference is that it's not a claims based approach, but rather a data-based approach to insurance. It's data-based insurance. So a claim is paid when a specific event occurs, and it means that you avoid the sort of long drawn out process that can occur for assessing loss. That's the traditional approach, where an event occurs, you have to have an examiner go out and assess. But this way, you have the ability to, they're simple to understand, they're easy to administer, and that claims payout is very quick. So those are the advantages of this approach. And actually, it was a parametric insurance product that first got me interested in joining the insurance industry 8 years ago. I made a friend who told me about this reinsurance company, Swiss Re, that makes the world more resilient. And that caught my attention because, how do you make the world more resilient? And she told me about a parametric product that Swiss Re and its partners had developed in Kenya that was providing drought protection for farmers. And the index was connected to satellite imagery, and those farmers could, they were part of an agricultural program. And if there was a certain level of lack of rainfall, then they would get an automatic payout to their M-Pesa phone, their e-wallet. And I was astonished at the thought of this, because up to that point in my career, I'd been thinking about sustainable development in terms of income generation and access to credit and savings. And I thought, of course, insurance is a way to protect against these risks. You think about, what does it mean to be resilient? To me, that's being able to get back up again when the bad thing happens. And imagine a farmer who's been through a bad harvest, they get this payout, they're able to plant again the next season, they can keep their kids in school, they can continue to feed their families. That is resilience. So now I learned about that, and I said, I want to, if there's a company that can do that, I want to work for them and do more of that. And now with the proliferation of data, these are new parameters or indexes for us to be able to manage new and emerging climate risks. And you mentioned the payout of the heat, extreme heat product. So this one is a really exciting one that Swiss Re has backed in India, and it has benefited over 40,000 women this year. The index was attached to, I think, reaching like 100 degrees Fahrenheit or 37 degrees Celsius over a certain number of days. And these women received a payout that provides them with critical income replacement for the days when it was too hot to go to work. And think about also the fact that since they're not at work, they're avoiding all of those health-related challenges that come from working in hot temperatures. So I think this is a really exciting way to provide access to risk protection that's hard to protect in other ways. And I think it also opens up the door for interesting new models that can be funded through public-private partnerships, because governments do have an obligation to the most vulnerable populations, and Swiss Re has some really interesting public-private partnerships that allow us to provide this kind of protection and help vulnerable communities to be more resilient.
I love that. No, thank you for sharing that experience, and I love hearing about how this is what got you interested, because I think for us at Acciona it was very similar. We started seeing all these parametric insurance models, and we got tremendously excited. And maybe this is a good segue to ask you, Quentin. I'm curious, as a carrier, what kind of have you seen really in terms of the main innovations around parametric insurance? And I'm particularly interested on how you think about their applications to serve the underserved.
Yes, thanks for the question. I hope you don't hear the rain, which is thundering around me. Maybe I should buy a rain index insurance. So no, I think Shirley, you gave the keyword, and I was just browsing through the questions while you were speaking, and there was also a question around subsidies and how necessary are subsidies for this to work, and it's interesting because I think the most successful examples at scale of parametric insurance, especially if you're looking at, parametric insurance, as you very well said, it's not only for smallholder farmers, it's not only for crops, and we have to work on new ideas such as this heat product. But there's such a societal need for resilience for the smallholder farmers who are feeding their countries and ensuring the food security of these, that I wanted to take a step back and take you to a country which is quite dear to my heart and where I've worked quite a lot, which is India. And the reason for that is India, they've been working on index insurance and agriculture insurance for more than 30 years. They've learned a lot, and they've improved it over time. And I think the public-private collaboration, they've really been able to crack it in an interesting way. So currently, there are two schemes in India. The main one, it's called essentially the Prime Minister's crop insurance scheme. And then there's another one for specific crops like horticulture, etc., which is an entirely index insurance scheme. But the main one, the way it works is it's an index, but it's a yield index. So you are looking every year at the end of the season, what was the actual yield of the specific crop, for a specific area. And the way it works is that you have, a government official who's doing a crop cutting experiment, and who's saying, okay, well, the yield was X, so you're triggering the index, or on the contrary, it was a good year, you're not triggering it. And I feel that, maybe it sounds a bit heavy, maybe it sounds, a bit old-fashioned, it's not entirely, satellite-driven, automatized, etc. But there's a reason why, it's the most successful scheme in the world. It's because, there is also the touch that goes along the tech, right? And index insurance, it's a very complicated concept, right? I mean, you explained it very clearly, but when you're a smallholder farmer in a rural area and you're being told, well, there's going to be an index and there's going to be data coming in there and it's going to be, the concept of that is maybe not that relatable. And I think in India, they've been able to make it work very well. And the proof of that is now in India, this crop insurance scheme, it covers just as many farmers who had a credit, because usually, when you take out a farm input, you take out a loan to buy seeds, etc. Often the bank imposes that you should take a crop insurance. But there are as many farmers now who have opted in even without a credit, because they felt that there was a demonstration of the value over several years, and not just, the year after the event. And maybe this takes me to the point of subsidies. In India, crop insurance, it's subsidized sometimes as much as 90%, by the state. And I think it's really, I mean, I don't think, you need to subsidize it always at 90%. That would probably be quite ambitious in many cases, but it's a key part of the success. And when you look at, agriculture insurance in France, agriculture insurance in the US, the levels of subsidies are similar. In France last year, the subsidy was increased from 60 to 70%. And so it's difficult to imagine that a smallholder farmer in Burkina Faso or, these other countries where we're working would be able to pay on his or her own, what, farmers don't pay, the full price for here. And I'm not saying that, farming is a very high margin business always in France. It's not. But there's a societal reason for that. So you need subsidies. Either they can come from the state, either in the beginning, they should come from donors to get the wheel started and prove the case. And there is great, work done by the WFP, done by the Global Shield, the Insure Resilience Solutions Fund with the German government. So there's a lot of public attention out there. But sometimes also, I don't know if there are some people listening to us who are working in corporates in the agriculture space, but, you can also embed it to the theme of this panel. You can also embed it in your sourcing strategy. We're working in Burkina Faso with L'Oréal. L'Oréal sources shea butter from women farmers in Burkina. Well, actually, they're providing, index insurance and health insurance for those farmers, and it's embedded as part of their sourcing strategy, and they subsidize it. So, it's to that extent that I think it can work. And maybe one last thing which got me excited. Last week we were in the southwest part of France, and we were discussing, with a person who's both in the wine and the insurance business, which for me, means that they're a person of high quality. But he was also explaining that in France we've now just launched the first index insurance also for farmers in France. So it's an index designed by Airbus, and it's essentially covering it's a yield index covering how much grass is going to grow in the prairies and how much yield we're going to get. But it's quite recent, and it's definitely more recent than what happened in Kenya or in India that we were talking about. So inspirations here as well.
Totally. No, and I love hearing how this space has evolved from 8 years, Shelley, when you first got excited, to last week, Quentin, when you're talking about like a new product, right? And I'm curious about the future. Felipe, you're on the front lines. I'm curious what's needed to take these products to market, and then are these type of products, something you think could be interesting for your target customer base?
Perfect. No, it's when you think of parametric insurance, usually you think of agriculture insurance, index insurance for agriculture. But when you see when you analyze climate risks, there's a lot of room to develop parametric insurance for urban populations. For example, in Tocantins, we don't distribute so far, not yet, parametric insurance, but and in Brazil, we are not really concerned about this type of risk because Brazil was not considered before a CAT country, a country with catastrophic risks of climate issues. But in the very recently, we had very huge extreme climate events, especially in the Rio Grande do Sul, which is a Brazilian state in the south of Brazil. We had extreme floods, and we had more than 9,000 gig workers there that were affected by those floods, and more than 20,000 restaurants of the iFood networks that were affected. So we really experienced how we are not prepared for this, and how this there were not enough insurance products or not enough risk protection for those type of clients. And it's something that we really, in order not only to put these products in the market, we really need a very different approach of underwriting. And because there's a lot of data available, not also to price this risk, but also to create preemptive measures in order to act beforehand. And through the digital platforms that are your distribution partners, we can send messages and advise customers, and so how they can protect themselves when these events are likely to happen. So there's a lot of room for product innovation, not only in the agricultural sector, but also for climate risks in large cities. For another example, very recent, last week in São Paulo, due to extreme storms, more than 1.4 million people were without energy. There were a lot of restaurants suffering, small restaurants suffering, because they lost all the food that they had storage in order to serve their clients. So for them was one of a big loss that really the iFood and all the partners had to cope with, and are thinking in how to develop solutions to create to make these ecosystems much more resilient. So I would say there's a lot of room for this type of parametric insurance for urban areas, especially regarding climate risks. And there's a lot of data available in order to create new products, and really need to engage more insurers and reinsurers on that conversation, because there's a lot of good possibilities on that.
Fantastic. No, thank you for sharing. And I echo a lot of the excitement about the future. Of course, as investors, we're always looking, for that next big thing, or these new opportunities that we think can scale, and we're certainly looking closely at this space. As we start to maybe move towards wrapping up, I'd love to take a step back. We've been talking about very specific business models, very specific opportunities. But as we've mentioned, we have such valuable perspectives around this panel. So maybe we can just share a little bit at a higher level how we think we can work with each other to really support inclusive insurance. So Shelly, I'd love to start with you. Can you maybe tell us a little bit about how reinsurers are supporting innovative business models, and how they're helping advance financial inclusion at a broader level?
Yeah, sure. So I think we help to create these ecosystems, pulling together partnerships. Maybe that's the first thing to say. We build ecosystems. Secondly, we have access to lots of data and strong expertise in underwriting and pricing and designing products. So we can work with partners within the ecosystem to help develop these new products and new business models. I would say the third thing that, or the second, those were two things maybe. Another thing that we can do as global reinsurers is we have experience in lots of different parts of the world, and it's very rare that you can copy and paste a successful business model from one place to the next. But what you can do is you can borrow ideas and lessons learned and transplant them into a new space. And that's where the magic happens. That's where the innovation takes place. And I think that's one of the things that global reinsurers like Swiss Re do really, really well. And then maybe that public-private partnership piece is also a key way that reinsurance contributes to expanding inclusive insurance and embedded insurance.
Fantastic. No, thank you for sharing. And I agree. I've definitely seen the reinsurer, at least from a technology perspective, the reinsurance companies really be leading voices in supporting entrepreneurs, helping them push new ideas forward. And then maybe Quentin, in that same vein, I'm super curious. Obviously, working with local insurance carriers or working with insurance carriers themselves is a path that a lot of entrepreneurs take. From your perspective, when choosing a partner, either as a startup or other reinsurers, what's top of your mind when choosing these partners when you're launching innovative products?
Yeah, that's the $1 million question, because it's so important. Well, I guess first it depends what you're looking for, because in this value chain, there's an essential piece, and Shanley highlighted it. It's how do you reach the customers? So are you talking about a partner who's going to help you distribute your products and, reach quite a number of customers? And in this case, we gave some examples of, criterias for success. And those criterias, the payments, the trust, the access, they're necessary, but they're not sufficient. And they're not sufficient, I would say, for two reasons. First, let's be honest, right? It's a hard business. Inclusive insurance is hard, I'm not saying any other venture in financial inclusion is easy, on the contrary, but you won't have customers come to you asking for your product, sometimes as credit can happen, etc., right? Especially since it's also a newer product for many people. So I think you need a partner who's got the resilience and who's got also the time horizon to make this work. If you've got someone in front of you who is likely not to be there in 6 months, or whose performance and objectives are extremely short term, then you might not pass the valley of despair moment, which unfortunately often comes before you can get the success. And that's normal, because it's a behavior change. It's new to the partner. If the partner works with an agency force, for example, you need to train that agency force. They need to themselves familiarize themselves with insurance, and then the customers, right? And then it can take off. And even digital, isn't always that quick, right? So there's the resilience, but maybe the most important is I think the drive. I think you're doing this not just for business, and Shanley, you said it very well. You're doing this because you want to make the world a safer place, right? So you have to have partners. I'm not saying you need to tie up with Mother Teresa, right? That's not the idea, but you need to have people who are focused on their customers, but in a good way. When it's quite easy when you have a conversation with a partner to figure out if it's someone working in partnerships or the leadership, it's quite quick to see if they've ever spoken with one of their customers. And that's often a good test, have they been in focus groups? Have they run themselves the interviews and the customer testing, etc.? And are they willing to, embed that in the strategy? Because you often won't get it right the first time. And, we run every year in our activity. And I saw this was also one of the questions on the chat, how do you ensure the fairness, the transparency? Well, it's great questions, right? Travel insurance, which I think the question mentioned, isn't always the most, transparent product, right? So we at AXA Essential, we have a number of criteria that we design into our products in terms of accessibility, in terms of affordability, transparency, etc. But, the reality, you only see it ex post, right? You have to try it. You have to let the customers buy your product, and then you have to go back to them and run surveys, run focus groups, run impact studies. So we often work with a company called 60 Decibels, which runs a lot of, you'll be familiar with them. I see Sebastian, I'm not surprised. They have a methodology that enables you, to run interviews over the phone with your customers. And, you need to have that. And this is also work for your partner. So we recently did it, and I'll conclude on this, with a microfinance institution in Colombia called Banco Mundo Mujer. And, the product is a relatively recent product. It covers, people in case of death, but also in case of cancer. And, it showed both the positives of the product, that, 72% of people said that, they wouldn't have been able to cope with the risks otherwise because, they didn't have much savings, etc. And that they had no way, 3/4 had no way to find any other insurance of this type, etc. So, and the claimants found it very efficient. But we also found improvement points. We found that, you had 16% of the customer base who wasn't, able to explain exactly what they were covered for. And, that means that you still have work to do, because 16% of a couple 100,000 customers is quite a number of people. And so they're paying for the insurance. They need to know what they're paying for. Easier said than done, but that's what I would say. You need people who are in this for the customer.
I love that.
It's great what you said, Quentin. Really, inclusive insurance is a very hard business. It's very challenging. Distribution is something that's really, really challenging, and also finding the right partners to develop this business is very challenging as well. But I would name that one of the main hurdles, is access to capital. Also, to develop inclusive insurance solutions to the low-income population. We all know that insurance, it's a capital-intensive industry. It's really important, to Insurtech, in order to create scale, to have scale, to develop products, and to be able to distribute and create more access to inclusive insurance products. It takes some time, so we need patient capital to invest in those initiatives. And also, I would name that industry partnerships are key, because we need the insurers and reinsurers to really create innovative insurance products that really tackles the needs, the protection needs of this new clients, of the low and middle income clients that need to be insured. Because sometimes the insurance, the traditional insurance companies, they are already earning a lot of money selling traditional insurance products. And when we want to create new underwriting models, new ways to price risk and to analyze those risks, it takes a lot of time to deliver a product, to take it to the market. And sometimes, as you said, a startup or Insurtech doesn't have the time to wait in order to test, because you always rely on the product that is provided by a carrier, not by yourself. You're expert in distribution only. And also, I'd say policy advocacy, because in order to innovate and really offer insurance solutions that are really offering the protection needs that the low and middle income population needs, sometimes we stop at regulatory barriers that are very difficult. For example, here in Brazil, we are trying to develop a product that offers life and health insurance product that offers a coverage for reimbursement of medical expenses. There's no insurance company that wants to carry this product because they are afraid of to being regulated by another regulatory framework, which is ANS, not SUSEP, because within the Brazilian regulation, if you are promoting health insurance products, health plans, we are not regulated by SUSEP, and you are obliged to offer all the coverage needed by a traditional health plan, but not only coverage in specific diseases. So it's I would name the three main ways that we can work together is have a better access to capital, industry partnerships, good industry partnership and collaboration, better and more close collaboration with insurers and reinsurers, and also distribution platforms that can provide a lot of data to create better products, and also creating joint forces to have a policy, more adequate policy advocacies in order to create more innovative insurance products.
I love that. Thank you, Felipe, for sharing that. As we're wrapping up, we have about 4 minutes. I'd love to turn our attention to some of the questions our audience has shared. And in the interest of time, maybe I'll combine a few, but there was a few individuals who were talking about how do we really understand the risks of these vulnerable populations, right? A lot of times these populations are exposed to high levels of risk. How do we design products in a way that is really helps protect them, but also is fair and non-discriminatory? I don't know if anyone wants to comment on how do you think around product design for these populations.
Maybe I can start. This is a big challenge, and I've sat in many meetings with our pricing actuaries, and we're looking at a particular risk pool or group of customers, and there's just not data. We haven't interacted with them. We don't know what the risks are. So you set assumptions. Usually the actuaries want it to be as conservative as possible, and the business development people want it to be as open as possible, and you have to negotiate and discuss what's reasonable, what you're comfortable with. But I think there's real wisdom in starting with pilots to test and learn, to get some data, to start to see what's working, to be able to adjust your assumptions as you go. That's one way to move forward. I think also thinking creatively about new data sources and working with your distribution partner to understand what data they have and how you can leverage it. There's concern about proxy discrimination and all of these kinds of things that need to be taken into account. But I think this is where the statement that's been made a few times that inclusive insurance is difficult. This is where the challenge is, but this is also where the creativity comes and where we can problem solve together. And I think there's ways to do it in a step-by-step fashion through iteration and testing and learning as you go.
And you know, the easiest way to serve your customer in the right way is just, to ask them, right? So this Burkina Faso example, I like to give this example because, L'Oréal, they were buying shea butter, or they were buying shea nuts from these farmers. And so we wanted to design an index insurance, and we were thinking, well, it's logical, right, to cover the shea production. But actually, when we went on the ground and spoke to all these women in the cooperatives, they were saying, well, actually, it's not that risky as an activity, in terms of crop. But, we also have maize, and it's a food crop. We have it for the families, and that's quite, weather vulnerable, right? And so L'Oréal ended up subsidizing the crop insurance for maize. And that's something we could never have imagined, in a room. We needed to have people on the ground to figure it out.
I love that. Oh, sorry, go ahead.
Exactly.
Yes.
I think it's, please, Shelley, go ahead.
I just wanted to say I'm a huge fan. I'm an anthropologist by training and background, and the more you can talk to customers and bring the voice of the customer into your product design and distribution planning, the better.
Yes, talking to the customers is key to that. I mean, when we started To Garantido a few years ago, I mean, the first thing we did is really was really bring the insurance companies and the actuaries to low-income neighborhoods to co-create products within the community, to hear what people wanted to have as an insurance product and understand their concerns about protection. And that really helped us. We know that at first, not everything was possible to be done, to be underwritten, but it really gives you a pathway to follow. And with the advent of new technologies, underwriting technologies, and data that is available, this became much more easy to be done. So it's, I would say, listen to customers, co-create products, and understand the risk that they face every day. It's the best way to provide better products. Because we will come to those sections with some assumptions, but sometimes they really change a lot. And it's really important to have this close ties and understand the risk of those low-income and middle-income customers.
Fantastic. Well, thank you all. With that, I think we'll wrap up. Very excited to hear about all these different perspectives. And thank you, Felipe, Quentin, and Shelley, for sharing your experiences. It's been fantastic.
Thanks so much, Sebastian.
Thank you very much, Sebastian. It was a pleasure to share the room with such great persons.
Thank you.
Bye-bye.
Bye.